Welcome back to Investing Talk Podcast. Today, we're zeroing in on a company that's, been grabbing a lot of headlines in the commercial space sector. Firefly Aerospace. We've got a fantastic stack of sources for this one, really breaking down everything from their financials to, their place in the market. The big question we're exploring today for you, our listener, is Firefly Aerospace a good time to buy now? We're going to try and unpack all the angles for you so you can walk away feeling well-informed. Before we launch into the details, if you find this discussion helpful, please remember to subscribe, like, and maybe drop a comment. It really does help us bring more of these conversations to you. And if you're feeling particularly generous, hey, consider buying us coffee. Also, if there's a specific company you'd like us to look into next, just leave a comment below. We'll definitely add it to our radar.
Yeah, this is an exciting one for sure. Firefly Aerospace. Operating in that booming commercial space and defense sector, it's quite an interesting case study, especially, given its recent IPO. It really represents that pioneering spirit, doesn't it? This new space race.
Okay, let's unpack this company then. When we talk about Firefly Aerospace, where do the fundamentals actually place them right now? What does their financial picture look like?
Well, what's particularly striking about Firefly is just how young they are as a company. And their financials, they really reflect that early stage, capital-intensive nature of aerospace. So for their trailing 12 months, they reported revenue of about $108.33 million. Now, here's where it gets interesting. Their net income for that same period was a significant negative $280.10 million.
Wow.
Yeah, that's a substantial loss. And it leads to a negative earnings per share, or EPS, of minus $21.45. So essentially, they're deep in the red, heavily investing for the future.
Okay, so a clear picture of high burn and losses, which, as you said, isn't entirely uncommon for a startup trying to break ground in a sector as demanding as aerospace. But how do we think about their profit margins? And crucially, their future earnings, given those current numbers?
That's right. Those negative profit margins are almost a given for aerospace startups. Think about the huge research and development costs, the testing, the infrastructure. It all costs a massive amount up front. As for future earnings, well, one of the challenges here is that there's no published forward guidance yet.
Ah, right. The IPO was recent.
Exactly. Their IPO just happened, so that crucial roadmap isn't available to the public. The real puzzle for investors then becomes, well, how do you assess a company's future performance without those guideposts? It's tricky.
And how healthy are they financially in the bigger picture, thinking about debt and cash flow? Are they just burning through cash, or do they have a solid foundation?
Well, the sources reveal that the proceeds from their recent IPO were specifically earmarked to repay outstanding borrowings and also preferred dividends.
Okay, so that suggests some debt pressure.
It immediately tells you there were some existing debt pressures that needed addressing, yes. And complementing that, their current cash flows are indeed negative, which, aligns directly with those large net losses and the heavy R&D spending we just talked about. They are, in essence, spending a lot to build their future capabilities.
That makes sense for a growth company. But what about their competitive edge? This space market is expanding so rapidly, it feels like new players are launching almost every day. How does Firefly stand out from the crowd?
Yeah, this is where Firefly Aerospace really tries to differentiate itself. They're considered a pure-play exposure to this burgeoning commercial space and defense sector. Their entire focus is right here. Now, while they are indeed competing with heavyweights like Rocket Lab and, of course, SpaceX, right, their unique strategy really lies in their integrated portfolio. They offer a whole range of capabilities, from launch vehicles like their Alpha rocket and the upcoming Eclipse, to lunar delivery capabilities with their Blue Ghost lander, and even in-space services such as the Elytra orbital vehicle and Oculus sensor platforms.
So it's more than just launch.
Exactly. This isn't just a list. It's a strategic move to capture value across the entire space mission, from getting things into orbit to actually operating them once they're there. And the demand for these integrated services seems pretty robust across government, national security, and commercial segments.
That integrated portfolio certainly sounds promising for long-term growth, yeah. But when we transition to valuation, how do we even begin to make sense of a company that's not yet profitable? In fact, it's reporting significant losses. It feels like we're looking at a different kind of investment altogether.
This leads to a really critical point about how you actually value a company like Firefly right now. Since they're currently loss-making, a traditional price-to-earnings, or PE ratio, simply isn't applicable, doesn't work. However, their price to sales, or PS ratio, is incredibly telling. With the market capitalization of $7.21 billion and that revenue of $108.33 million we mentioned, their PS ratio stands at approximately 66.6.
Whoa, okay. 66.6. For a company that's not profitable yet, that sounds exceptionally high, even for a growth sector like space. What's typical for aerospace peers that are making money?
Indeed, it is very high. For profitable companies in the aerospace sector, PS ratios typically range from, say, 3 to 10.
3 to 10 versus 66. Okay.
Exactly. So Firefly's PS ratio isn't just high, it's in a different galaxy by comparison. This signals that the stock is currently trading almost entirely on future growth expectations. It's a bet on what they could become rather than their current fundamental performance.
Like paying premium movie ticket prices for just the trailer.
That's a good way to put it, yeah. Not the feature film yet. So traditional valuation models like discounted cash flow, DCF, or even relative valuation, they aren't really meaningful or even available right now. It's because of the negative earnings, the high rate at which they're burning cash, and that crucial lack of forward financial guidance we talked about.
Right, so it's truly a story of potential over present performance right now. Okay, let's shift gears then. What about the technical analysis? What has the stock's price action looked like since its IPO? How has the market reacted since it first started trading?
Okay, so Firefly's IPO price was $45. Since it started trading, it's been in a recent range of roughly $49.11 to $57.07. Its previous close was $60.35. Interestingly, its 52-week range, which effectively represents its all-time high since the IPO, goes all the way up to $73.80. So we've definitely seen some significant movement already.
And when we talk about that movement, what about its volatility and the trading volume? How much are investors actually buying and selling this?
Well, the stock has a beta of 1.52. Now, beta measures a stock's volatility compared to the overall market.
Higher than 1 is more volatile, right?
Correct. A beta of 1.52 means Firefly tends to move about 52% more than the broader market. So if the S&P 500 goes up 1%, Firefly might jump 1.52%. But conversely, a market dip could see a sharper fall. It means it's significantly more volatile. Volume has been robust, though. Around 8.58 million shares traded, showing strong interest and liquidity right after the IPO. However, it's still very early days for meaningful technical indicators like moving averages or, RZ/MACD commentary. The stock only began trading on August 7th, 2025. We just don't have enough data history yet.
Understood. Given that early stage, what's the overall sentiment around Firefly Aerospace right now? Are analysts weighing in yet? What about insider activity? Anything happening there?
Currently, there are no published analyst price targets or ratings, mainly because of that very recent IPO. It just takes time. However, the IPO itself was actually quite strong. It had an upsized initial offering, heavy Wall Street participation, and a pretty robust institutional demand. So the initial sentiment among the big players seems to have been largely positive. A lot of that is driven by the sheer excitement surrounding the commercial space sector as a whole.
So are we seeing a lot of those next SpaceX narratives swirling around in the market chatter?
Precisely, yeah. Social media sentiment is notably bullish, and it's heavily fueled by those kinds of aspirational narratives and the broader sector's growth potential. The main concern, if any, among more cautious observers comes back to those persistently high valuations we just discussed.
Right, the PS ratio.
Exactly. As for insider activity, no transactions have been disclosed yet. That's pretty standard due to the post-IPO lockup periods that prevent early selling by insiders. We'll need to keep an eye out for when those lockups expire down the road.
Okay, all right. Let's talk about what could truly ignite this stock then. What kind of upcoming events or developments could really move the needle for Firefly Aerospace? Thinking both short-term and long-term, these are the catalysts investors are always looking for.
Yeah, this is absolutely crucial for understanding the potential trajectory. In the short term, you'll want to watch very closely for their first quarterly earnings report post-IPO.
That'll be telling.
It really will. It'll provide the first real public glimpse into their financials as a traded company. There's also the IPO lockup expiration we just mentioned. That could potentially lead to insider selling, which might impact the price. And of course, any new contract wins or, importantly, successful launch milestones will be major positive signals. They need to prove their execution capability.
And looking further out, for the long haul, what are the bigger picture catalysts that could truly transform Firefly into a dominant force in this sector?
Stepping back to the broader landscape, long-term success really hinges on successful and frequent launches of their new technologies, like Alpha and Eclipse. Plus, the proven expansion into lunar operations with Ocula, Elytra, securing more significant government contracts, especially from defense agencies, will also be absolutely key. And then beyond their own operations, there's always the potential for M&A mergers and acquisitions, or maybe strategic partnerships, as this whole commercial space sector continues to mature and likely consolidate.
With such ambitious plans, though, there must be inherent risks involved. What should a potential investor be acutely aware of when considering Firefly Aerospace? What are the big watchouts?
Absolutely, there are definitely risks. The primary stock-specific risks include that high cash burn rate and their history of significant losses. That's number one. There's also substantial execution risk on their ambitious growth and launch schedules. Let's be honest, getting rockets off the ground consistently and reliably is incredibly difficult. It's rocket science, right?
True.
Literally. Furthermore, there's the potential need for further capital raises or maybe share dilution down the line if their current funding isn't sufficient for their aggressive plans. That could hurt existing shareholders.
And beyond the company itself, what about the broader market or sector risks that could impact them, regardless of how well they execute?
Right, good question. This brings us to external factors. The space sector, generally speaking, is highly volatile. Stock prices often swing wildly based on speculative sentiment, news headlines,
Like cycles.
big hype cycles, rising competition from established players and new entrants. We mentioned Rocket Lab, Relativity Space, and obviously SpaceX. That's a constant factor that could squeeze margins or market share. And finally, broader macroeconomic shifts, think interest rate hikes, recessions, those could impact government and commercial space budgets, which would directly affect Firefly Aerospace's revenue pipeline.
Okay, so taking all of this into account, the financials, the market sentiment, the potential catalysts, the significant risks, what does this all mean for someone listening right now considering Firefly Aerospace? Our sources provided an overall rating. Can you walk us through that and what it implies for the average investor?
Sure. Based on the comprehensive analysis of these sources, the overall rating provided is a 5 out of 10, so right in the middle.
Okay, neutral.
Kind of neutral, yeah. The rationale is quite balanced, really. On the one hand, Firefly Aerospace offers these unique integrated capabilities in what is undeniably a high-growth sector. And it saw very strong institutional support during its IPO, which is usually a positive signal. However, the valuation is extremely high compared to its current fundamentals. The company is still deep in loss-making territory, and the short-term price action is likely to be quite volatile post-IPO as the market sort of digests all this new information and tries to figure out what it's worth.
So it clearly sounds like this isn't a stock for every type of investor profile. What kind of investment horizon does the source suggest might be appropriate for a company like Firefly Aerospace? Is this a quick trade or a long hold?
You're absolutely right. It's definitely not a fit for everyone. For short-term trading, sure, the high volatility and speculative momentum might offer opportunities, but the associated risk is equally high. It's essentially a gamble on short-term sentiment swings. For a long-term investment, it's really only suitable for aggressive investors, people who are prepared to accept multi-year risk, potential volatility, and the possibility of future dilution. This is essentially a long-term bet on the broader commercial space sector's explosive growth and on Firefly's ability to actually capture a significant piece of that future market.
And for those aggressive investors, the ones willing to take that leap of faith perhaps, what entry points and risk management strategies are suggested from the sources? Where might they consider getting in and how should they protect themselves?
Okay. The suggested entry price range, according to the sources, is between $48 and $53 per share.
Okay.
This is considered near the current support levels and, importantly, below that initial IPO high. The idea is to avoid chasing those early post-IPO peaks, which can often correct. For active trading, a stop loss right at the IPO price of $45 is suggested as an initial support level. That's a way to limit potential downside if things go south early on. And a take-profit target, at least for trading, is set around $70. That's a recent high point and represents a natural initial resistance level.
Wow. Okay, what an incredible journey through the financial universe of Firefly Aerospace. Such a compelling example of a company that really embodies the future, doesn't it? But it also clearly carries the typical significant risks of a pioneering venture trying to launch into, well, uncharted financial territory.
Indeed, understanding both sides, the exciting potential and the inherent challenges, is absolutely key when you're considering any investment in such a dynamic and, frankly, forward-looking sector like this.
So for you, our listener, the question really remains. Are the stars aligning for Firefly Aerospace right now? Or is it perhaps a little too early for liftoff into this particular investment? We hope this conversation has given you a clearer picture to consider.
As we consider Firefly's trajectory, maybe the real question for long-term investors isn't just if they'll succeed, but how a single, truly disruptive breakthrough in space technology, whether from them or someone else, might fundamentally reshape our very understanding of value and investment in this whole arena. That's a universe of possibilities worth pondering, isn't it?
That's a great thought to end on. And that's it for this discussion on Investing Talk podcast. Thank you so much for joining us, and we look forward to helping you unpack more insights next time.